Lance.
Yeah, we're with Lance Roberts, one of the smartest money men we know with the Street Talk Advisors. And Lance, we're going to talk about the general market, but also specifically about Southwest Airlines, because the investor reaction hasn't necessarily been positive so far.
Right. Well, you got two things going on. The news today about them building their own hub is potentially a good thing for them. More flights equals more revenue. It's good for Houston, obviously creates jobs. But the market right now as a function is in a what's called a distribution mode. In other words, there's more selling going on. And remember, when markets move in a direction, 4 out of every 5 stocks follow the market as a whole. You know the old saying about a rising tide lifts all boats?
Yeah.
It works
or
in the opposite.
Them too,
it
right?
does. It absolutely does.
Because yeah, we're down. At least the Dow is down about well almost 90 points right now, and it's a pretty broad sell-off.
Yeah, exactly, and that tends to happen. So don't read too much between market reaction right now versus the news today on Southwest. It's probably a good thing for Southwest longer term. You know, the problem is for airlines in general, they have a tough time making money, period, just because oil prices and capacity of what they can charge for tickets in a weak economy.
Yeah, Delta was going to buy an oil refinery just to produce their own jet fuel.
Yes.
Let's move on to the other big hot stock of the week, and that's Facebook.
Again.
That I believe it's up a little bit this morning, but it's down something like it's about $7 from its IPO price.
Lots of pressure here. Of course, you know, what's happening is Morgan Stanley now being kind of questioned about who knew what when. Apparently, Morgan Stanley was giving information to some of their inside institutional guys and not distributing the fact that there was a lower revenue forecast pending just before the actual announcement. And then what most people haven't heard about is that Facebook was served with a $15 billion privacy suit, class action lawsuit, on Tuesday.
So a lot of people went into this sort of flying blind, that they made the investment in this not knowing all of these details.
Absolutely. Well, and some of these things came out afterwards, but again, you know, for most individuals, you know, we're sitting at home and we're going, hey, I want to own Facebook because I'm on Facebook every day, you know, whatever. It must be a good stock. And of course, you know, we buy it with expectations that things are only going to go up. And then we get detached from the news and what's really going on internally. And you know, you and I discussed this on Monday, is that there's a lot of potential issues with Facebook going forward, that maybe it's a better thing just to sit and wait and watch for the stock to what they call base. You know, find where its bottom is.
Find out what people are willing to pay for it before you go buy. Do you think, this is my little amateur theory, you know, I'm trying to be Lance here for a minute. Do you think that Facebook waited a little too long to go public, and that they're sort of, you know, jumped the shark, so to speak, right now? Well, and maybe if they had hit it a year ago or 6 months ago, there would have been more buzz.
Well, absolutely. You know, you would want to go IPO when you have a lot of market movement in your favor. And of course, you know, that was right after we announced Operation Twist or any one of the previous quantitative easings. That would have been a much better time, because you had a lot of market push, and institutions were buying anything and everything to get their hands on. So as with anything, timing is everything. And yeah, their timing for coming public at this particular point, with the potential crisis in Europe, the debt ceiling debate coming up, we're going into an election cycle, there's lots of pressures on the overall market. So
do you have any anticipation about what, you just mentioned the election cycle coming up, about what sort of an impact that could have on the overall markets and on our retirement plans? I mean, it seems like it's going to be kind of choppy because people don't know the future. Well, we never do. But
we never do, and theoretically, presidential election years typically tend to be good for the market. However, this particular year, we have some overriding concerns. We have what's called a fiscal cliff coming up, which is the expiration of a magnitude of tax cuts coming
which is
at the
a
end of
huge
the year.
deal, start January 1st.
It's a 4% hit to GDP. We're currently at a 2% growth rate. That's a recession period next year if that occurs. We also have the debt ceiling debate coming up again, like we did last summer in September. And then, of course, there's going to be a lot of debate and a lot of issues and arguing back and forth between the two candidates about the real state of the economy, which could put fear into investors as to what potentially might come.
So proceed with caution.
Be careful, right? You know, summer months in the last 2 years have been very negative for the market, and very likely we're playing out much the same way this year. So yeah, right now it's better to hold a little bit more cash, be a lot more conservative until we get past the election.
And wait till it plunges a little bit. If you had waited till it plunged the last 2 summers, that would have been a great time to buy.
It would have been great times to buy. And that's the thing, is just kind of wait for all the selling to subside, and we're in that process right now. We're not there yet.
All right. That's why we bring you the best minds in finance here on Fox 26 Morning News. Thanks, Lance.
My pleasure. Thank you.